Dear students, knowledge seekers and learners, welcome to lecture 4 of week 3 wherein we are going to discuss about primary market. In today's lecture, we are going to start with the meaning and role of primary market, followed by the functions of primary market that are performed in the financial markets. After that, we will try to understand the different methods of issue in the primary market. Subsequently, we will discuss the public issue procedures or the initial public offerings that forms a substantive part of primary market, followed by the role of intermediaries in primary market. After that, we will try to understand the pricing of issues of the securities in the primary market, followed by developing an understanding of the regulatory framework. In the end, we will take up a case study related to IPOs in India to understand whatever we will be discussing. Let us begin the journey. At the outset, it is important to delve into the meaning of primary market. Primary market is the market where new securities are issued for the first time. This is where issue of securities is happening for the first time and people, investors and entities are getting an opportunity to buy newly issued securities. Primary market facilitates the direct transfer of funds from investors to issuers. So, when newly issued securities are offered in the stock market, in the financial markets to the people, investors, entities, they can directly buy from these offerings. In primary market, securities are created and sold to raise capital. Thus, primary market is where creation of new securities happens, which also means that creation of new securities leads to expansion of the ownership or dilution of the ownership. Just to understand this through an example, if a company has already issued 1000 shares and now they are offering 500 new shares in the market. Because these 500 new shares are offered for the first time, they will constitute as a part of primary market. Now these new shares will dilute the ownership. Earlier, the ownership was limited to 1000 shares. So there were 1000 owners or there were owners who were holding 1000 shares of the company. As new 1500 shares are being issued, the total owners will now be 1000 plus 500, that will be equal to 1500. Thus, ownership is now diluted in the sense that previously there were 1000 owners who were sharing from the profits. Now there are 1500 owners who are going to share from the profits. This is another important feature of primary market, that it dilutes the previous ownership. Thus, we can say that primary market is the origin point of financial securities in the financial markets. Let us try to understand the core purpose of primary market. The purpose of primary market is to raise fresh capital. But the question arises, why raising fresh capital? What is the objective of raising fresh capital? So the first reason for raising fresh capital is business expansion. Whenever we want to expand the business, it means that we need more investment, more capital. There are different sources of more capital, but one of the sources, which is internal source, is expansion of the existing owners, which is only possible by issuing fresh securities in the primary market. So this is what is the first important core purpose of primary market. The second purpose is new projects. In primary markets, we will always see companies coming up with new securities because they have started some new projects, which are massive projects, revolutionary projects, and for those projects, capital or funding is required. So that is the core purpose of primary market, that is financing new projects. The third is debt restructuring. Debt restructuring refers to either debt reduction, it also includes debt management or delay of debt repayment. Any of them can fall under the debt restructuring. What happens is when a company's debt becomes unsustainable, then company has to adopt certain policies, and under those policies the debt restructuring happens so that the debt again becomes sustainable. Now that restructuring of the debt is important. So for this debt restructuring, the companies use internal source and they can issue fresh securities to get capital from the market and use that capital for debt restructuring, which includes debt reduction or debt management or delay of the debt payment. Thus, this is also a core purpose of primary market. Primary market thus enables firms to access the public savings because whenever public buys new securities, they are using their saved money. Also, primary market converts savings into long-term productive investment because when people buy securities, that money is lying with the company and a company uses that money to further expand or diversify their operations. Let us now try to understand the key features of primary market. The first key feature of primary market is that primary market deals only with new securities. It does not deal with any security that is already being floated. And this is where it creates a demarcation for the investors that only those investors who are interested in buying fresh or new securities will enter this market. The second feature of primary market is that there is no trading of existing securities. No trading of existing securities happens, and this is quite interesting because existing securities trading happens only in the secondary market. Thus, the whole concentration remains on new securities. The third key feature of primary market is the direct relationship between issuer and investor. These two, that is issuer and investors, when there is some kind of direct relationship between these two, it simply means that issuer and investor can interact because the shares are offered in the market. Market forces are already working on the newly issued shares, and this creates a direct linkage and relationship between the company and the investor who is going to buy or who has bought the share. The fourth key feature of primary market is that it is regulated and disclosure driven. Primary market is strictly regulated by Securities Exchange Board of India, and all the companies who are going for the primary issue of share have to agree to the necessary disclosure in the SEBI and other platforms so that transparency is maintained. The fifth feature of primary market is that it focuses on one-time transactions per issue. And this focus is revolutionary because it reduces the errors and also manipulations, thus helping the financial market to grow. Thus, the focus of primary market is on capital creation and not the liquidity, because it is not about short-term buying and selling, rather it is bought for long-term investment. Let us now try to understand the functions of primary market. The first function of primary market is mobilization of savings. Mobilization of savings is very important to further push the economy into progress. So we know that people have savings, and when these savings are mobilized, then these savings convert into investments that can be used for development of the economy. Thus, primary markets offer an option to the savers to invest their money by purchasing freshly issued securities. The second function of primary market is capital formation. Capital formation refers to creation of capital out of the financial markets. Primary markets provides the opportunities to the company to issue new securities by diluting their current ownership so that more of the capital is generated and can be used for diversification and expansion of the company's work. The third function of primary market is allocation of funds. In primary market, funds are being allocated in a very systematic and efficient manner. The fourth function of primary market is pricing of new securities. How the new securities price will be determined. Whether the new securities will be issued at par, that is on the face value, or premium, that is value more than face value, etc. That is also one of the functions of primary market to decide about it. And the final and the last function of primary market is expanding investor base. That is the base, the number of investors that have a stake in a particular company, they go on to increase because of the availability of dilution of ownership through the primary market. Thus, primary market stands central to corporate financing in Indian financial system. Dear students, knowledge seekers and learners, there are different types of issues in the primary market. And in this slide, we are going to talk about those types of issues. The first type of issue is public issue. That is issued for all the public, all the potential investors with no restriction. The second type of issue is rights issue. This issue of new securities is only available for people who already hold some of the shares of the company. So it is a restricted number of investors who become potential investors or who get the eligibility to buy newly issued shares. The third is private placement, where new issued shares or debentures, that is securities, are issued to the people specifically. So it is issued to people specifically through some order or through some kind of parameters. So that is private placement. The typology of the issues in primary market is based on who is offered these securities. Let us now try to discuss all of these types of issue in detail. The first issue which we had highlighted was public issue. Public issue inculcates a way through which securities are offered to general public. Means there is no restriction. Anybody can buy on the offered price. This public issue is also divided into several forms under the primary market. Initial public offering that is the first offering, then follow up public offering, which is not the first one, but in the second stage, again the shares issued are new. So these two types prevail within the public issue. Public issue in the markets, in the financial markets, is the most visible form of capital raising. The second type of issue was rights issue. Right issue is offered to the existing shareholder. Let us take an example. If Mr. A holds 100 shares of X Limited and 200 shares of Y Limited. If X Limited is offering newly issued 300 shares and Mr. A wants to buy 100 out of it, okay, then Mr. A under the right issue can only buy these more 100 only if he holds shares of X Limited. So because in this scenario Mr. A holds X Limited share, that's why for Mr. A right issue is valid and he is eligible to buy further 100 shares of X Limited. But if Y Limited also issued some more shares, say for example 350 new shares, then Mr. A cannot buy these shares under rights issue because Mr. A does not hold any shares of Y Limited. So in rights issue, the right to buy is limited to only those investors who already hold shares of the company concerned. The features of rights issue includes preemptive rights, that is rights that are from their beginning, and discounted price. The shares are generally offered to the existing shareholders on a discounted price, and this discounted price is actually the margin of difference in the issue, because if the company goes for public offering they have to bear some cost, so that kind of cost can be saved and the same cost or something lesser than that can be used to provide a discounted price. Thus, it would be justified to say that rights issue maintains ownership structure in a company. So, the ownership does not dilute because it is the same people, only the number of shares have gone up. Let us now talk about the third type, that is private placement. Securities sold to selected investors comes under the category of private placement. Typically, private placement is offered to institutional investors and it is quite substantial in become a hybrid type of feature. Private placements are faster and less regulated than public issue. So if there is an immediate requirement of a company and the company is confident that the people whom we choose will be buying our shares, they can go for private placement. Let us now talk about another type, that is initial public offering, IPO. Initial public offering is the first time offering of shares to the public, that is freshly issued shares. They transform a company from private company to become a public company as well, because when shares are being sold, the ownership is being diluted. Initial public offerings, that is IPO, is a major milestone in corporate lifestyle, and each company several times in its own lifetime go for initial public offerings. Let us now try to delve and understand the initial public offering process. The first step in this process is appointment of intermediaries such as underwriters, because in this process the whole intermediaries provide the skill based services as well as they are accountable. The second step is preparation of prospectus, which is a document related to the rules and regulations of the company. The third step in IPO process is the regulatory authority, is the regulatory approval from the relevant authorities such as SEBI, Ministry of Corporate Affairs, Ministry of Commerce, etc. The fourth step in IPO process is the issue of opening and subscription. That is, issue is being opened, now the shares are in market, anybody can buy. And then subscription means there we have received application of people to buy the share, but to whom we will be offering the share. That is issue opening and subscription. Then it starts after deliberating upon who is going to buy how many. The allotment of shares starts where the rule is being implemented, and based on the application and request of the investors, those selected are given some shares. Then the last point is listing on stock exchange. One IPOs are there, they are listed on the stock exchange to reflect a good performance of a company. Thus, in IPO process, we can accept and contend that structured and regulated process happens, and thus IPO process is a very significant milestone in Indian financial system. Let us now try to discuss the prospectus, which is a key document in the primary market issuance. Prospectus is a key document which is issued by a company. This particular document, that is prospectus, contains the financial details of the issue, business information related to firm or the company, and risk factors associated with the company. Prospectus as a key document ensures transparency and informed decision making, thus making it powerful and maintaining regulation and governance in the issue process. Another important function of primary market is pricing of securities. There are two main methods through which securities are priced. Number one, fixed price method, and number two, book building method. Both these methods are used depending on specified need, but the pricing of securities determines, but both the methods ultimately determines the issue price, which is based on demand and valuation. Let us now try to understand fixed price method in detail. Fixed price method is a contemporary method where issue price is determined in advance by the issuing company. Under the fixed price method, investors know the exact price before applying, and thus they are more confident and feel more secure in applying or buying the shares. Also, under fixed price method, subscription happens at a pre-decided price. Not only this, in the fixed price method, demand is known only after the issue closes, thus not leaving any room for manipulation. Also, fixed price method is a simpler method, but it may also lead to underpricing or overpricing if not used properly or if not used by skilled people. Under fixed price method, thus it would be justified to say that pricing is issuer driven and not market driven. The second method of pricing of issue is the book building method. Under this method, issue price is determined through a bidding process by investors. A price band is announced instead of a fixed price, which gives options to the investors to identify and then determine the price. Investors submits bids based on the quantity of shares or securities which they are going to purchase or price within a particular band. Under the book building method, the finest price is only discovered based on the aggregate demand and not on the whims and desires of the company. The book building method is the most widely used method in IPOs in the modern times. Thus, it would be justified to say that pricing under book building method is market demand and is market driven and demand based. Let us now try to understand the role of intermediaries in primary market. The first is the merchant bankers who plays a very integral role in facilitating trade, cross-border trade. Second, underwriters. These are also entities that facilitate the securities market by providing skilled and evidence-based mechanism for trading. The third intermediary is registrars who of the companies that keeps record of prospectus and memorandum of association, and finally the brokers who participates in providing the facilities to buy and sell the securities, which makes it really interesting and easier for the people to invest their money. Thus, we can justify and say that intermediaries facilitate smooth execution of the issue. Let us now try to appreciate the role of SEBI, that is Securities Exchange Board of India, in primary market. SEBI regulates all the public issues that are happening in the country, and specifically it ensures that disclosure norms are followed. That is, whatever information needs to be in the system should be provided to the stakeholders. Similarly, investor protection, particularly focusing on small investors. Okay, because small investors are hesitant to uh, to go for these kind of policies. So keeping their confidence in the markets is also very important. Another important role which is performed by SEBI in the primary market is fair practices. Fair practices refers to practices that need to be followed, wherein there is transparency, accountability, and responsibility. These practices makes the market attractive, simple, and thus building confidence of small investors so that they may pump in their money and participate with zeal and confidence. Thus, SEBI, starting from 1992, has been performing its duties and also has been at the forefront of digital transformation in the primary market. Thus, SEBI, as regulatory body, maintains integrity of the primary market. Dear students, knowledge seekers, and learners, let us now try to understand and discuss the advantages of primary market. The first advantage of primary market is that it provides capital to firms. Providing capital to firms refers to giving more and more financing availability to the companies to expand and diversify. The second advantage of primary market is that it encourages investment. Investment encouragement is really interesting and important because if more investment comes into the economy, it can transform the economy through infrastructure development. The third advantage of primary market is that it expands ownership base, which is good for the people and investors, but it may not be very good for the company. Thus, overall, we can say that primary market supports economic growth, which is very important for countries, particularly developing countries like India. However, there are certain limitations of primary market as well. The first limitation pertains to the high cost of issuing securities. This is very important because if securities are put up in the market at a high cost, the small investors may not be able to buy it. The second limitation is time consuming process. The initial public offering or offerings in the primary market cannot start or initiated without the documentation and necessary approvals. These documentations and necessary approvals take lots of time, and this creates a limitation for the primary market. The third and final limitation of primary market is that primary market risk there is during issue always remains a huge risk which needs to be calculated or forecasted. Thus, primary markets requires strong planning and regulation to be efficient and effective in the financial markets. Dear students, knowledge seekers, and learners, we will now take up a case study to understand the primary market issuance. Zomato launched its IPO initial public offering in India in 2021. It was the first major technology startup to offer IPO in India, which means it was offering to the investors freshly issued new shares. The key highlights of this offering included oversubscribed multiple times, which means if the shares were 1 lakh, the people who gave application to buy the shares was 15 lakhs. So this is an example of oversubscription. Okay, so that was one of the key highlights. Second is strong retail and institutional participation. It was not just the participation from the people, but it was also from small agencies that are the retail outlets or in finance, as well as the institutional participation that the shares were also subscribed by companies and entities. And finally, the third key highlight of Zomato IPO was that it witnessed a marked growth of digital economy firms that started participating in this IPO. That is also one of the important highlights. Thus, if we see the Zomato's IPO 2021 as a case, we can draw certain conclusions out of this case study. The first is the case of Zomato's IPO demonstrate growing investor confidence in the Indian financial markets. The second, this IPO of Zomato in 2021 also shows importance of book building and pricing strategy. In continuation, it also reflects shift towards new age sectors in the capital markets. And finally, primary market thus adapts to change in economic structure as we have seen in the Zomato IPO of 2021. Dear students, knowledge seekers, and learners, let us now summarize what all we have discussed in today's lecture. We have discussed and appreciated the point that primary market deals with issuance of new security. We have also understood and learned that primary market includes IPOs, that is initial public offerings, rights issued, and private placements. Not only this, we have also highlighted that a structured process ensures transparency which should be followed and which is being followed in the primary market. And finally, primary market plays a key role in capital formation in Indian financial system. Thank you very much for being with me in this session.